This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. Client George sent me an article in Market Watch, which is talking about rocks over paper, but specifically critical minerals and important stuff that we have need for military and national security and all that jazz, and how this article is talking about they're not buying treasuries, and the U.S. is trying to negotiate with Africa for lots of metal and mining plays, since we're not apparently friendly with China anymore. Trump's trade war with China has obviously had collateral damage in this regard. Been very good for the precious metal and industrial metal trades, but point is, rocks over paper is a great little theme here that continues, not just things over paper. Anyway, my things over paper, all about inflationary assets, gold and silver, platinum, palladium, copper, steel, aluminum, all kinds of commodities. We're in a commodity roll here of size as it relates to rotation of money for all kinds of reasons. Look at this extremely excited silver gold market as well. So we have gold advance, silver advance, copper advance, steel advance. The charts have spoken long ago, even from oversold aluminum, AA, hot fire flames, XME, still trying on dollar sideways. It's not even weak, it's just sideways. Steel, of course, there just really isn't too much here that isn't working. AMR, I happened to not call out, but we have a 400-week bounce. We've got some more insider trading. So coal has even come back into the fold. You can see BTU, which is probably the better one. I actually like this one better. But anyway, AMR, BTU, they're also in it. Rio, as you know, fan favorite here. It's already made it all the way up to 78.79. It's pushing up a little bit. These can be spiky though when we get a dollar bounce. So yes, silver in its own little planet, looking for exhaustion, and haven't seen it yet. So gold has just taken out the October highs, and silver is still moving a little higher as dollar yuan looks to have maybe stopped. We'll see. We'll see. So be careful on silver. It's definitely parabolic. You're chasing the precious metal parabola. This is the mean on this ratio. So very, very extended. This is your palladium update for those who've been trading this for many months. We still need to break above this 1750 area. That was the downtrend all the way from 2008. Lovely scoop pattern. And the indicators have been moving higher slowly but surely. Same thing with platinum. Platinum actually took off like a scalded cat. Very, very close to 2010 levels. So congratulations on holding this very small market relative to gold and silver. It is quite small, but that means it can move even faster. When does silver meet resistance? Look at this, John. Okay, it isn't about silver per se, but timing it with the dollar yuan. We haven't bounced yet. Number one. Number two, look at this. Back in August, when I updated this chart right here, this is silver. I said we get above. This is June. I said this is June was critical because I said this consolidation is very bullish once we get above for gold and silver. Did I expect we were going to go all the way up here? Absolutely not. But I did give these levels, 44 and then 53 and then 64. So what happened? Very nice job. We came up to 53. Then we had volatility in October. Perfect. I got this on a weekly. Held the 10-week. I thought we would digest inside here a little longer. Okay, that was wrong. We got it above, period. And we're parabolic, period. This is the breakdown level. There's nothing here to do for me as far as I'm concerned. There's nothing to be done until I can see some volatility again. So I saw it in September coming for October. I have not seen it yet, and I'll look again for tomorrow, but I can tell you, big volatility. One, this comes back inside 65. XAG, USD is the silver dollar. Let's think of it as carry trade. Very important. And the reverse, USD CNH, which is the Chinese yuan dollar carry trade. So that's why I put them side by side. All I can say is follow April to now, and you can see this whole kind of extravaganza. It has to come back inside, let's call it 65 XAG USD until there is volatility. We've got nothing. Yen coming up off the ground would also be cause for gold volatility. We've got nothing. XAU USD is the dollar Gold, think of it as a carry trade. I do. Look how we just got above the October volatility. Today, what's the upside? 4,800. And this was all in June. I've got a big intermarket analysis. So we were going sideways, ready for a breakout in NASDAQ and gold. That happened. Silver took off hot fire flames. It would be logical for silver to calm down and gold to keep going up to that 4,800. And I'm talking XAU USD 4,800, which is like continuous contract. Yeah, be careful also, another kind of gold. Average cost of production, which was a main thesis for why gold miners were going to outproduce 2024, 2025, and now they have. But a main reason is because the cost of energy had fallen, and that makes up 40% of their operating budget. So they've been crushing it. But now look at, that's a lot of speculation built into that divergence, where the annual average gold price is far exceeding the cost of production of gold miners. So that is definitely no longer hugging cost of production. It has outrun massively. And then there's another chart that I found. Remember I said, can't look at gold without also looking at Japanese dollar yen or government bond yields. Silver, of course, is on its own little parabola, but look at the fractal of late from 2025 in particular, April 1st in particular, where trade wars picked up on the tariff terror by Trump. Yeah, we definitely had an explosion higher in gold and silver as a result, with the 10-year Japanese government bond yield pushing higher as well. So I think that's kind of momentum that I'm looking for to stall. All the reasons basically for gold and silver from that April 5th, 2024 big picture. Lots and lots of monster sector rotation calls of late, but I was really with Jose and Brian and Jeffrey and Tim, very much sector rotation of monster size that's still in view. But then once it starts to go into a parabola, I get much more concerned. So it's now a little bit outsized, which can enter volatility. We had some in October. I'm giving you the price targets that I have higher in gold. I don't have one for silver. I think that's just pure speculation. And I've tried anyway to give you the reasons why it was great trade to stay long, because again, falling energy prices and the underlying continues higher, plus all the gold macro reasons. Foreign central banks, they're not going to stop converting. In other words, settling trade outside of the dollar and instead in gold. It was all part of the same post. They're going to settle for gold. It's all part of fiscal dominance, debasement, devaluation, de-dollarization of the dollar is bullish gold. This is all the stuff I wrote back in April of 2024. So gold is at all-time highs nominally, but not relative to USD. It has much more room to run. And central bankers need gold, not gold equities, but need gold to circumvent the dollar. However, gold and silver stocks will appreciate nominally as the underlying price rises. Gold and silver chasers will point to $35 to $850 gold run during the 1970s when stagflation occurred in the U.S. During an inflationary wave. Well, we've got commodities coming in soon. Back then it was more oil. I think we have industrial commodities are the new oil. And stagflation, absolutely. It's also the Fed's number one concern. They see rising inflation and or inflation expectations against falling employment. So economic growth contraction, stagflation is their concern. Anyway, we can still have this stuff move higher, no question. But I think it's a lot of speculation that this type of run is in play. And I think it'll be different. It's always different. This, again, was written in April of 2024. Investor expectations are currently extremely low for miners. I can't even tell you. How high are they now? It's the exact opposite. We've gone from investor apathy to an investor appetite of size, and it really did set up perfectly for outliers revert with velocity mantra. And now we're there. So now that we're there, I'm like, that's when I'm worried. So this is the post from April 2024, the macro reasons, that was all in there. So, and then June, right here, gold, this was July, but I have the posts that I have for the charts I gave you in June. And then this was an intermarket roundup in early July. Gold is consolidating before next push higher. We had it.
Join Club today to engage with Samantha and her team of 10 experts. Scan this QR code or click the link in the description. Subscribe to LaDuc Trading YouTube channel for more live trading room recap videos and other content.